Liz. Thank you. Please have a seat. So one thing we've heard a lot about today is that there isn't just a shortage of capital to invest into renewables, into green projects. There's actually a shortage of projects that investors seem to feel confident about. And partly that has to do with a future that is constantly evolving. As the great Yogi Berra said, the future ain't what it used to be. And this is sort of a problem for investors. Following on from the last panel, I have three speakers here who are involved at very different stages of investment. We have Val von Lierop, who's president and chief executive of Chrysalix Venture Capital, a VC capital company involved at the very beginning. Then we have Paddy Padmanathan, president, chief executive of ACWA Power, a developer, and Torben Möger Pedersen, the chief executive of PensionDanmark, an institutional investor. So, Val, I want to start with you. Last year, the IEA predicted that we need $44 trillion to finance this transition to a net carbon zero world. According to Bloomberg, we are way falling short of this 1.5 trillion a year. Up to that point, we're at about 300 billion. How are we going to close that gap?
That is a very interesting question, because I mean, this is clearly an enormous gap that we have. 44 trillion, which means about 1.5 trillion a year, and we currently, as Katrin said, according to Bloomberg, at around 300 billion a year. So I think there are four things that we really have to focus on. First, it is that customers need to see better, greener, cheaper products. Whatever we do, it's all about cost. Energy is a commodity industry. Cost is king. I'm very encouraged with what happened at the Paris Auto Show here in a month ago. Suddenly, electric vehicles are not just a niche industry any longer. Suddenly, we see all the automakers coming out with a whole series of electric vehicles, mainstream vehicles. VW struck me the most. They announced 30 different types between now and 2025. And most interesting, they came with the VW ID, which they directly announced will be much cheaper than the Tesla Model 3. It will have double the range of the Tesla Model 3, and by 2022, they expect to have sold 1 million copies. So this is very significant. This is going mainstream. It's about better, greener, cheaper products. The other thing is investors need to be sure that they can make money in this space. I mean, we heard earlier this afternoon Patrick Pouyanné of Total saying, you cannot make money in solar. We have to take that perception away. We have to convince people that you really can make money. If I, as a VC, go to mainstream investors with a sustainability proposition, I suffer from the fact that many have lost their shirts in clean tech investing over the past 15 years. So what do? You need to get beyond that perception. And so you should not sell sustainability of clean tech any longer. You should focus on the enablers of industrial innovation. I give you an example what I mean with that. We, for example, do industrial innovation for the mining industry. So mining is an archaic industry. Most innovation that we have seen there for the past 30 years is only go bigger. Bigger mines, bigger machines. One of the big problems in the mining industry is that for every piece of good ore, you move at least 100 pieces of waste rock. So now we bring sensors and artificial intelligence, these two enablers of innovation, to the actual exploration equipment. What does that mean? That means that the operator who takes a big scoop of rock in real time gets to read what is in that scoop and can then decide either to lay it aside or bring it up to the surface and then drive it to the mill for crushing and further processing. The productivity gain from bringing these enablers to the actual exploration equipment is as low as 20-30 million per mine per year, but more likely in the range of 200 million. So this is what you have to focus on, the enablers that can really help you make money. And very quick, the last two things that you have to ensure is, A, regulation that helps with investor certainty. It's extremely important. And last but not least, we need to have leaders who realize that if we don't work on this stuff, others will. If I travel worldwide and talk with many industry leaders, everybody talks about innovation. We in the West talk primarily from a perspective of holding on to the past and doing a little bit incremental stuff around the site. When I'm traveling in Asia, I see many more leaders who are focused on shaping the future. So, better products, making money, regulation, and leaders who can really work on the future we all need.
Paddy, before I come to you, I just want to skip to Torben briefly, because one challenge I see in terms of making money in that space, I mean, for a long time in that past, large power and infrastructure projects provided stable long-term returns for institutional investors like yourselves. That is a sort of modus that we're not into anymore with renewables. They're smaller, decentralized projects, they're profitable, but in terms of layers of fund management, how do you deal with that? Do you disperse funds to them? How do you cope? And what would you like change?
Well, actually, I have a quite optimistic view, because there's no lack of capital out there. There's investors looking for new type of asset classes as they have to diversify away from low-yielding government bonds. Probably we will live in a low interest rate environment for a long period of time. So the need for pension funds and other long-term investors to redeploy their capital is very large. Renewable energy infrastructure assets actually provide you with investment opportunities with very attractive features, because most of these assets are in a regulatory environment where you, due to long-term power price agreement or other structures, are looking into a relatively stable cash flow. Top line is not that volatile, and you can, by intelligent risk mitigation, actually, as a financial investor, end up with a relatively attractive risk-return profile on the part of the risk you are taking in these projects. And I don't agree that we're looking to small-scale investment. Actually, many of the investments in renewable energy infrastructure are very large. A new offshore wind farm in the North Sea is something between 2 and 3 billion euro per park, which actually needs long-term capital at a large scale. You can also find smaller projects, especially in solar and in biomass, which maybe fits for other type of investors. But investors looking for opportunities to, say, invest large tickets per project can relatively easily find them out there. Now, from an investor point of view, the challenge now is that from being a very exotic asset class, investing in renewable energy infrastructure has become more or less a mainstream thing for investors of our type. When we made our first direct investment into an offshore wind farm in 2010, we were, I guess, the only pension fund doing that, and many people found that very exotic or strange. Now, I think most pension funds, at least in Europe, have found ways to include infrastructure assets in the energy sector into their portfolios, forced by the low interest rate, but also because the technology has become more mature, and you have seen a development of, let's say, investment vehicles, which makes it, let's say, accessible also for, let's say, less sophisticated long-term investors. We have, during the last 6-7 years, built up a portfolio of approximately 3 billion euro, which is 10% of our total assets under management, which means that we are actually the owner of approximately 2,500 megawatts of green power production capacity, wind farms, biomass power plants, solar plants. This is actually equivalent to the yearly power consumption of our 700,000 members. It provides us with returns in the range between 5-6 to 10-11% per year, locked up for 15 to 20 years period of time, which we find in the present market, the present environment, very attractive. And it is very well received among our members and stakeholders. They now look upon their pension fund not only as the provider of good pensions, but also as their provider of clean energy. So there's a number of, let's say, add-ons which also give this an attractiveness. No, so I think actually because of the big supply of long-term capital, you should be quite optimistic on how to reach these very ambitious goals you mentioned. So that's the case in, let's say, Western Europe and in North America. You don't need any public money actually involved. You need, as pointed out, strong regulatory policies to give investors comfort when you're entering into illiquid investments with a duration of 20 to 30 years. I think the biggest challenge when we are discussing deployment of capital is how to do that at a large scale in emerging markets, where
This is actually something I would love to use this cue and get Paddy into the discussion, because this is part of what you do. You're a developer. You know, your company operates in several countries, but you're based in Saudi Arabia, and of course, a lot of the funds under the Paris agreements are allocated in developing countries, and some of those challenges of operating in the countries would be interesting to hear about.
Well, thank you. Look, there's a lot of discussion around, trillions of dollars needed. Yeah, absolutely. Needed for what? Needed to deploy into projects. The issue is around the supply of projects coming online fast enough. That's where the challenge is. It's a big subject. Yes, in certain parts of the world we have got constraints. There are issues around risk. But by and large, what we find, we're a small company, but we operate in the geography that we operate in, GCC, Morocco, southern part of Africa, all countries in southern part of Africa. We're deploying $4.5 billion of capital a year in renewable energy. We're not short of, we are short of money. Please give me more money. But honestly, financing has not been the problem. Even for, Botswana, Mozambique, Morocco, Egypt.
So the problem is regulatory risk, is it, or what is the problem?
Projects coming up, investable projects coming up fast enough. And it's to do with institutional capacity in many of these countries. Rabbits and headlights syndrome, where they are frozen, they just are not able to. They've signed something in Paris, now they're trying to figure out what that means. Sorry, just that's the honest truth. What do we do? How do we move that forward? They're all seeing a lot of numbers out there, but they just haven't figured out how to attract those numbers to their own countries. And then they put out one tender, and then when they don't receive that number, they say, wait. Wait, I'm going to cancel this project and wait for the next one till I get that magic number, whatever. So there are a lot of other issues well beyond financing that I think the world will need to address as they go forward into COP22 next week.
This is a perfect moment actually to bring in Val briefly. There's this great story you have to tell here. Tell us a spy story from China. You did due diligence on a wind farm. Go on.
Well, it's funny that you bring that up. I have a lot of history with industrial espionage, but I was in China with my driver and the interpreter on the way to a wind farm, and they got lost, total confusion. And I said to the interpreter, can you step out of the car for a moment? And he was confused. He said, why is that? I said, well, why don't we walk through that black car there? And can you please ask the driver if for a change he wants to drive in front of us instead of behind us? I can tell you spy stories for the rest of the evening.
I love it. We're going to go back to more substantial issues here, but I love this. Torben, if all pension funds in the world, just to sort of get at our heads around the scale, were to move 10% of their holdings out of coal and oil and gas, what would that mean? Where would they invest that money instead, and what would it mean?
That certainly will drive up prices of renewable energy assets and yields down, making capital costs even lower, and also I think be a very sound, prudent, long-term, let's say, change in asset allocation. But I think, like Paddy, I think we have to be more, let's say, concrete in addressing the obstacles making the flow of capital from north to south in these areas too small. I think there's not any big issues when it comes to funding wind parks in the US, Canada, Europe. That is very well developed market and institutions. But when it comes to, let's say, Africa, some place in Latin America, Asia, it is quite hard for investors like us to find a way. And I should just then give you a very short example of what we actually have done to overcome the obstacles. When we look at, let's say, an African country and are to decide whether we would enter into an investment in a wind farm with a 30 years duration, the political risk issue is extremely high. As we don't know very much about these geographies, and we are reluctant to tie up money for such a long period of time. That's why we, 2 years ago, together with the Danish government, established what we call a blended finance vehicle, where government provided 1/4, 25% of the capital funded by the foreign aid budget, and the Free Pension Fund provided 75% of the capital. This fund are making direct investments as a minority investor in climate-related projects in emerging markets. We are teaming up with regional development banks and local investors, and we get comfort with the risk profile because government has accepted two things. They have accepted a first loss position, so and we have traded away some of the upside in order to get some downside protection. And when we are investing together with the Danish government, the royal crown printed on the prospect, we get some kind of political comfort, because if this African government would, let's say, change rules, they're not only hurting an unknown Danish pension fund, but they're putting their relationship to one of the big sponsors, the Danish government, at stake.
So what are we going to do for your republic? Need the crown? No, I'm just kidding.
No. But no, it's actually our biggest investment until now has been what some of you probably know, the Lake Turkana wind farm in Kenya. It will become the biggest wind farm in Africa and provide Kenya with approximately 25% of the power demand in this country. And it has been 10 years on the way, but now it's on track. And I think this is a very good example of how you, by combining public and private money, actually can overcome obstacles. The government is very satisfied with this arrangement because they get leverage, or they get much bigger capacity compared to a situation where they had to fund their foreign investments only on public budgets. So
let me bring in Paddy at this point, because I see that you want to. And next are you guys. So
I mean, Lake Turkana, all credit, fantastic, wonderful project. But absolute, the relevant example, took 10 years for this project. If we're going to deploy the kind of $1 trillion, and a lot of it is out there, we don't know exactly how much is there, but there's a hell of a lot more than what we think. These type of projects, which are real, which are needed, which can be done, which has been done, should be turned out much faster.
I mean, one thing you and I
That's the
talked about
issue.
is Saudi Arabia and the fact that they don't just have abundant oil, they have abundant sunshine, and that they will be one of the solar superpowers of the
Right.
future.
They will be,
Yeah.
but okay, it's taken us a while. But
Let's get some questions
once
from
it
the
start
audience.
rolling out, it'll be huge.
Yes. So we have one right here in the front. Sorry, 5 minutes. Let's keep it sweet and short.
Hi, I'm Lee Collins from Recharge Magazine. I just wondered what the panel thought about what the Shell boss, Ben van Beurden, said earlier about he couldn't find projects to invest in that were profitable. Because I was a bit surprised by that comment.
Well, I did talk to him for a few minutes as he was leaving to point out that we are investing and we are making profits. We're not a charitable business. We are actually making profits, and we are and we are making profits with renewable energy, solar PV being priced at 4.5, 5 cents per kilowatt hour, which is in that part of the world. Look, I mean, it's not for everywhere, but in that part of the world, with that credit environment, with that solar resource, to fill that spectrum of energy need every day when the sun is shining, that's the price. That's what it's going to be. It's not going to go backwards. So we are there. I think the problem with all of this discussion is that we're in the middle of a transition, or not in the middle, in the early stages of a transition. So there are different experiences that are coming together. Of course, there are different people have entered the transition at different stages and have lost money, making money, and they're all in different pieces. Okay, so the manufacturer is a different from an investor who is investing in these type of long-term assets, and the venture capitalist who is sort of really investing in the upfront. So, but look, the market works. At the end of the day, they're all taking different levels of risk for different levels of rewards. Nobody is going into these investments on the basis that I'm going to lose money and are utterly surprised when they do. They make money on some investments, phenomenal amount of money. They lose a phenomenal amount of money.
So, well, would you agree?
Well, this is about perceptions about how you can make money. And I think that, with all due respect, Mr. van Beurden is not even informed about what is happening in his own company.
Yeah.
I am, with them, one of the biggest investors in a company called GlassPoint.
Oh, yes,
GlassPoint is doing solar thermal for enhanced oil recovery, replacing the burning of natural gas in Oman. World's largest project, it's a gigawatt large. We are in it with Shell. This is very, very profitable. I mean, we are bringing this to California right now, and because of the Clean Air Act now in California, even if gas would go to a price of 0, it would be in the money. So, I mean, it depends. If you just I mean, you have to teach people, investors, big industrialists, about that it really is possible to make money. And we are doing this together with Shell today as we speak.
Mr. van Beurden is not in the audience.
I'm sorry.
No, I would love him to respond. We have time for one more question. Don't be shy. Yes. Do we have a mic? Just because it's easier to understand. 1 second.
Yeah, this is a question for Paddy Padmanathan. You mentioned 4.55 cents is okay in certain regions because of high irradiation, solar energy that I'm talking about. But even in those countries, we have seen the prices go down to 3 cents. And there are other countries that now begin to question why would they give higher prices? But at the same time, this is just not financially viable. This is hurting the solar industry, wouldn't you say?
What is hurting the solar industry and what is hurting renewable energy and everything else is misinformation, misunderstanding, misconceptions, perceptions, right? It's the same thing. So that, by the way, there's a world-famous project of recent times in Abu Dhabi, 2.54 cents per kilowatt hour, just to get the numbers right, for a 350 megawatt PV. Trust me, they are making money. You've got to understand what the terms of the contract are. So you can't compare, you've got to compare like with like. So in that project, what probably many of you, I certainly know it because I know the contract, don't realize is that that contract says during the summer months, for 4 months of the year, it's defined, they will pay 60% more than that number. to start with. Okay? So there you go. So it's not 2.54 anymore. That contract says, please put a residual value on the asset of 17%, 17.5%, I think, at the end of 25 years. Again, that's a different number. So, but what is true is in that part of the world, and it's not just because of radiation, it is also because what the cost of construction is today, where the components are at today, what the credit environment is today, the low levels of base rate. We are at about a 5-cent world today in this part of the world. Okay, it'll move around, 5, 6, 4, 4.5, whatever, 3. But I would argue that it's a... So at that number, as you quite rightly say, natural gas needs to be, to compete for that segment of the electricity. Let's not talk about the base load segment. But for that, when the sun is shining, natural gas needs to be at $2.50 per million BTU for every day of the year for the next 25 years. Well, clearly, I think I would bet on PV today every time. But let's not get lost with sort of, euphoric, oh, we're done. No, okay, so PV and wind has got there because of the enormous policy supports that a handful of countries like Germany gave to deploy and bring innovation and get the volume in. What is needed from policymakers now is to support all the other technologies that are needed if you really want to decarbonize or make whatever you want, decarbonize or make carbon neutral by 2050. I think decarbonize should be the target rather than carbon neutral. So you need to really broaden out the full technology choices. You need to get CSP in there, you need to get battery technology down to that level, you need to get geothermal down to that level, you need to get waste to heat down to... at the end of the day, we got to somehow arrive at all these different technologies coming in at about 7 cents per kilowatt hour. 6, 7 cents. That's where we need to get to. So, and we can get there. Money is not the constraint. Policy is the constraint. A certain amount of public capital is required to drive technology costs down by giving some support for volume in the early days.
I'm afraid we're out of time, not quite in terms of climate change, but certainly for this session. So thank you very much, the three of you. And I am told to remind you all to use your app to vote on the very pertinent questions that the New York Times has asked you. And we will then inform you of the results tomorrow. So yes, please use your app. And see you after the coffee break, promptly at 4:35. Thank you. Thank you very much. It's brilliant. Thanks for the spy story.